All right, good morning. My name is David from Trader Dale's, and today we're going to go over a NASDAQ NQ trade that we did yesterday using a very simple technique. Now, there are really two ways to play this. There is a more beginner-friendly way to play this, and there's a more advanced way to play this, and I'll kind of go into that, uh, both of them. But I just want to kind of give you an idea of how we kind of formed the narrative for this trade, looked for what we wanted to see, saw it play out, and then used a simple change in stated delivery tactic on a 15-minute to get over a 2-to-1 risk to reward trade. So this is yesterday's price action on a 15-minute. I've got this in replay. So coming in, we were bearish. Okay. If you look above, yesterday's previous day high had taken out liquidity here. Okay. These red and green lines are the initial balance highs and lows of the previous day. So as you can see, the initial balance high had already been taken, which is always a key draw on liquidity. So we just figured these highs up here and these levels up here had already been taken. So where do we look to see where price can go to? Well, below we see really nice equal lows that were developed right in Asia. That's a very strong draw on liquidity. And then coming down here below, we have actually a 4 confluence level, which is huge. Okay. One of the confluences is that it's previous day's low. That's always a key draw on liquidity. Okay. Another confluence is that this wick right here was the 1 minute 9:30 wick before this move on Friday. Okay. Those levels are usually taken out on the market opening, okay, pretty quickly, but sometimes it is left. And when it is left, it is a big draw on liquidity. Okay, so that's two things. The third thing is, okay, it is yesterday's previous day's initial balance low, which has not been tested yet. Okay, and it's a key pivot low on a higher time frame chart. So we have the draws on liquidity. So now what are we looking for on the 9:30 open? We want to see some type of manipulation, which is going to take out London's high. Okay, and then we want to see some type of rejection to the downside where we can look for a change of stated delivery. So let's kind of just move the charts forward. Okay, so on the opening, we get that immediately. We take out liquidity, and then we have this huge 15-minute death candle. Now, aggressive traders are going to try and get short in this area, the more advanced ones, using some of our techniques. But I'm just going to focus in today on a beginner, very easy technique that you can use. So after this bar has closed, okay, a lot of traders will think they missed the move. But that's not true because you still have these draws on liquidity below. We just need some information. Okay, so now we're looking for a change of stated delivery, and we're going to mark that out. So what's a change of stated delivery? It's usually the start. It is the start of the up candle, series of up candles that sweeps liquidity and then reverses to the downside. We have an order block here. Typically, this is really a propulsion block that forced price higher. So not only do we have the change of stated delivery here, we also have a breaker block because this order block here was now disrespected. Okay, so what we want to look for is price to come into this level right here. Okay, and then we want to attack our lower levels here. Okay, stops usually going to be right above the bodies of these candles. Okay, at least it has to be at least halfway up this candle. Okay, usually a little above, but this is usually a good place to leave that. So even a move to equal lows is a 2.43 risk to reward trade. Okay, if you took this down to the 9:30 in this area right here, it's almost a 5-to-1 risk to reward trade. So let's see how this plays out. We're looking for price to tap into that and then move lower. Okay, so we get our tap in. Price rejects, moves lower, attacks equal lows first with a vengeance. Target 1 hit, target 2 hit pretty quickly. Okay, this is a very simple, okay, manipulation, accumulation, manipulation, distribution using a change of stated delivery technique. Okay, and what makes this a good trade is the clear draws on liquidity that we have. That's probably the most important things. Without a clear draw on liquidity and a destination for price to go to, then this is just a pattern trade and something that you should not take. Okay, this is actually the most important part of the equation, the clear draw on liquidity, because that gives us the narrative to look for to set up a trade inside that direction. Okay.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.